Welcome back to the Dividend Diplomats YouTube channel, everyone. Got Lanny, Bert, the Dividend Diplomats. We're here to talk to you, comparing three undervalued dividend stocks against each other in the Diplomaniacs wrestling ring.
All right, everybody, we are only 20-something subscribers to go. Do us a favor, hit that subscribe button. Did you do it? Did you do it? Do it.
Do it. Looks to me like they're doing it, Lanny. So everyone, thank you. We appreciate the support. We got a little surprise coming down the hopper for you, but we got to get to 10,000 first. So please help us out if you haven't.
And if you haven't, hit that like button as well on the video. Here we go. We're bringing three dividend stocks, and this is from the comment on our last video. Yep. If you haven't checked it out already, we talked about three cheap dividend stocks to buy. They were on Bert's stock watch list, showcased Intel, Verizon, and General Mills. But today we're talking about three completely different stocks in the same industry, putting them in the battle ring right now to see which one is the best utility dividend stock to buy possibly right now. Again, we're only looking at three, and three out of the handful of tickers that the one commenter had on our last video.
Yeah, the utility sector is near and dear to dividend investors' hearts because most dividend investors will find a healthy allocation of utility stocks in their portfolio. Why? We like companies that have predictable growing dividends. Utility companies, they're very stable. They're big staples in their community. Revenues are slow growers, consistent growers. It's highly regulated. Earnings are the same. They're slow, consistent. So it leads itself well for consistent dividend growth too.
It's like the battle of the hare versus the tortoise.
I mean, except it's three tortoises going together. That's what we think of when we think utilities.
Yeah, utilities is really like a fixed income investment. You really know what you're getting. You're going to get a solid yield well above the S&P 500, aka the overall stock market, at least 2 times that yield. You're going to get low to moderate dividend growth, usually in the range of 2 to 5% per year. Again, kind of like a cost of living adjustment because that's the increase in price that the utility usually passes on to their consumer. I'm pretty upset because my fixed charge went up this year. And Bert, I know you got the same.
Yeah, they're not messing around with that. And unfortunately, I don't see that one trickling its way through to the dividend there. But we'll see. You're exactly right, Lanny. It's fixed income. A lot of people view it that way, which is why, they're not the sexy video for us to talk about. I don't think anybody's going to say, let me just pump in 1 million views on utility stocks versus your Bitcoins, your Dogecoins. We would love it, but a lot of you aren't out there, but they are a very critical component of every dividend growth investor's portfolio. So we feel the need to make sure we cover it and bring to you some undervalued options in this important sector.
Owning these dividend stocks in the utility industry really reduces your beta or your risk or your volatility overall. That's why it's always a good way to have a little bit of a concentration in there because, again, it reduces the overall volatility to your portfolio. Again, when you compare that, it's just not going to be wild and crazy on their stock price. But nonetheless, we have 3 utility stocks to talk about, Bert. And the way that we're going to do this, similar that you've seen in our other videos, we're going to put them through the Dividend Diplomat stock screener, which focuses on what metrics, my man, Bert?
PE ratio less than the S&P 500, payout ratio less than 60%. And looking at that third metric, the history of increasing dividends, where we look at the 5-year average growth rate and how long a company has increased the dividend. What is that bonus metric we like to throw in there, Lanny?
How super sexy is the electric charge from the utility company?
Yeah, that's not it, but I'm sure they're all pretty high right now. It's actually the dividend yield, where it'll be very nice and fun to compare here for the utility companies. So, Lanny, what do you think? We changed up the format of how we did this in our last video, where we looked at the metrics first for all 3 companies versus our traditional, where we look at the companies one at a time. What are you thinking? What do you want to do here for this video?
Great question. Let's keep it right to the point because that's what the viewers want. They want to see each 3 stocks across each metric. So we're going to take a metric at a time, all 3 stocks. So here we go. We're going to take it down to the AK run for that first dividend stock, a stock that I've owned for 10 years. a stock that has hit bad news lately with the under the table deals, little behind the scenes, the man behind the curtain matchmaking over here.
Yeah, that's probably why our fixed charge is going up. They got to cover those bribery fees that they were paying.
Oh, not an ugly or not a pretty sight, but a very ugly one for First Energy, ticker symbol FE. We're going to dive into price to earnings ratio on First Energy. Then we're going to hit them with the Duke Energy, ticker symbol DUK. But Bert, what's that third stock we're going to talk about?
We're heading down, stay in Ohio. Two of them, Ohio based. You know, I love when we have Ohio companies in here. AEP, guess what their ticker is, everybody? They didn't have to think too hard about this one. It was still available. Their ticker is AEP.
Or Rob Van Dam.
Love it. AEP.
There, as you heard it from Bert, the Hurt Locker. So to get into the first dividend metric, that price to earnings, which is going to be great for this one, because now not only are we going to look at the S&P 500 PE ratio, but you're going to see them against their competition here. First Energy, based on forward earnings of $2.54, has a PE ratio of only 15.29 on that share price of $38.83.
So Duke closed at 107.81. Their EPS was $5.19. PE ratio $20.77. Let's see where AEP falls in this, Lanny. What are you thinking?
AEP, as of obviously August 16th close, trading at $90.30 with a forward price to earnings of $4.68. They have a PE below 20, so they're sitting second on this list, kind of sandwiched in between First Energy and Duke.
Fantastic. All are below the broader market, which has forward earnings of in the low 20s. Clearly, First Energy the lowest, with Duke and AEP higher. The thing with Duke taking the cake is that highest of the three, but all are signs of undervaluation. Let's move into metric 2 here, Lanny. What do you think? Payout ratio? You want to talk to us about First Energy?
So First Energy, based on that forward dividend of $1.56 per year spread over 4 quarters, they're at 61.42% on the payout ratio. Or what about?
All right, Duke, $3.94 annual dividend. Divide that by $5.19, a payout ratio of 75.92%. Ooh, yeah, that was my reaction there. Let's see if Ohio can bring this one home, though.
They do. They actually have a 63.25% payout ratio based on that annual dividend of $2.96.
So what I think is actually kind of fascinating here is typically when you think of utility stocks, you think higher dividend payout ratios. We most likely would have expected to see a lot of companies above the 60% threshold because it is so consistent. You pay out such a high percentage of your earnings. Not uncommon, typically don't worry about it. I was kind of shocked that First Energy and AEP were just barely over 60%. I was expecting them to be in the 70s and 80s like you see with Duke. So they have a lot of room.
It's a good. So now we get into the dividend growth rate, that third dividend stock metric. Now, First Energy actually cut their dividend a handful of years ago, so definitely be aware of that. Plus, you have these bribery charges. However, First Energy keeps it chugging along. They've increased their dividend now for 2 straight years at an average growth rate of 1.63% over 5 years. Obviously, some years didn't have any dividend growth.
Got to start somewhere after a dividend cut, though. So, hey, back-to-back years. Jordan had 2 3-peats. Let's see if they can get to 6 soon enough. I'm kidding. Hopefully to 25. But Duke, they have a 5-year average dividend growth rate of 3.11%, and they have increased that dividend for 8 consecutive years.
Wow. Now to bring it back home to Ohio, Columbus is not our home, but Bert went to OSU. He is Ohio State grad. So all the haters, let's hear it. All the give us a thumbs up on the video. But they've been increasing their dividend for over 11 years with an average growth rate, not 2, not 3, not 4, actually over 5% at 5.74% on an average dividend growth rate. Pretty good for utility.
Yeah, that's fantastic, right?
Now, Bert, that was the 3 metrics. To recap, before we get into that bonus metric, First Energy has a PE of 15.29. Duke's PE is 20.77. AEP's is 19.29. The payout ratios for First Energy was 61.42. Duke was 75.92. And then for AEP was 63.25. And then the dividend growth rate 5-year averages, staying consistent with the stock metric or the stock picks, 1.63% First Energy, 3.11% for Duke, and 5.74% for AEP. What about this bonus metric?
All right, this is where the money is about to be made for utility companies because, as we mentioned earlier, typically have higher dividend yields. So I'm expecting to see all of them at least double the S&P 500, which is around that 1.5% mark. First Energy, that dividend yield at their current stock price, you take that annual dividend of 156 divided by that share price of 38.83. That gives you a nice dividend yield of 4.02%. Fantastic.
And then Duke's at 3.65% based on that stock price.
AP, let's end this on out here. 3.28% dividend yield. So First Energy, highest yield of the bunch. Looking at it right there. But again, all three are at least double the S&P 500 is just what I was expecting going into that.
AP right now is like, what are you guys waiting for? So Bert, who's your pick here out of the three?
All right, let's take a look here. I mean, First Energy is clearly trading at the largest undervaluation of the group. They're the most undervalued, but we've hinted and joked around about some of the issues they are going through. There's probably a reason why they're trading at a discount. In terms of the management, got caught in a major bribery scandal. They don't have the best dividend history. They're still shaking things out from their balance sheet perspective. So even though they're undervalued, they're not the one I'm running to buy at this moment. If I had to look them between Duke or AEP, I would go with AEP because they are a slight undervaluation. They have a better payout ratio, better dividend growth, increased it longer, and their dividend yield is comparable, even though it's about 30 to 40 basis points lower than Duke. What are you thinking, Lanny?
So I think the best out of the three is AEP. They're going to give you the best overall yield and dividend growth standpoint. Plus, they don't have all this baggage right now. Consistent dividend growth of 5.74%. You look at the ultimate dividend factor, take the yield plus the growth, you're looking at pretty much, hate to say it, but 9%, give or take a few basis points. Plus, on a stock price appreciation standpoint, they're only up about 11% year to date and over the 52-week mark.
There it is. So AEP, looks like we both are thinking they're the clear winner of the three. So everyone, let us know, which of the three do you like best? And if we mentioned there are a ton of utility companies out there. If there's one you like better, we want to see you run them through the stock screener and compare them to the three companies that we discussed tonight. Share us the metrics if you think one is better and tell us why. We would love to hear your opinions.
If you're buying one of these dividend stocks, we'd like to know. It's been a while since I bought a utility stock. I'm sure, Bert, could you say the same?
I can. I think I was buying Consolidated Edison for a minute when it dropped below 70, but it's been a little bit since they've been there. But yeah, it's always good to consider and brush up and make sure you're refreshing how utility companies are doing.
If you guys haven't already, definitely subscribe to our channel. Give this video a thumbs up. We are here. We can't wait to cross 10,000, bring out a funny wrestling dividend stock, little discussion, as we call it. We appreciate it. It's Bert the Hurt Laney from the Dividend Diplomats. Over and out.